Hello traders, Gary Wagner with WFGForex.com, your daily market update for Forex Gold. It is Tuesday, the 3rd day of August, and this is the Daily Report. Forex Gold is currently trading higher, anywhere between $4 and $5. Currently trading at 1186.28. It's had a high of 1191.90, call it 1192, and a low of 1179 today. Traders, as you know, we are long the market. We did make a recommendation. It was based on a three-river morning star and the confirmation. We'll take a look at that in a little while. Today I kind of want to talk about the power of a doji, because it was the doji that actually signaled the bottom within that market. And as we talked about before, there's many occasions when you will see that doji form at the bottom. It does appear at other points, and we're going to also talk about that. But when you couple Elliott wave with Fibonacci and then you look for specific candlestick patterns at appropriate points, as you can see on this last trade, at least tentatively, it appears as though it absolutely pinpointed and picked a bottom in the market. As you know, we took a look at the marketplace and did ascertain that we had absolutely begun a corrective phase. This was that A wave, and we were kind of looking for an end to the A wave and our first impulse wave within our corrective phase. Of course, A, B, and C, we're going to have a total of 3 waves in this particular cycle. As the market came down, it did run through some various Fibonacci areas very, very quickly. Let me go ahead and put our Fibonacci retracement up on the board. And as you can see, I have simply drawn our Fibonacci retracement sequence. I'm using this low, which is created at the beginning of that first wave, the impulse wave during the impulse phase, and the very top of the market, the top of wave 5. When I do that, of course, we get our following areas. Of course, 0, 12, 13 is going to put our 23% retracement. We have a 32% retracement around 1181. 1154.55 at 50%, and then 11, call it 27.28 is our lowest 61.8, and then 78, of course, is down here below 1100. So that when we take a look here, here's the beginning of that A wave. That, of course, that's the absolute top of the market at 1265, and we consider the way that it moved itself. It did come down hard. It tried to form a base. It did come up and almost take out this high, but wasn't quite able to do that. A couple of dollars shy of that. We had this engulfing bearish, a couple of dojis, and then this very, 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 very hard sell-off. The market, when it sold off, if you take a look at the area, it sold off and broke very, very strongly through this 23% Fibonacci retracement level. We talked about the fact that on 3 occasions it attempted to form a base and move back above it. As you notice, we had a series of higher highs, and this is what Steve Nissan calls a scouting party. In other words, it's a point in which the bulls are testing the fortitude of the bears. They're trying to see what happens when the market goes up in these areas, if there's a lot of selling activity coming in, and in fact, that did turn out to be the case. You get these couple of these double dojis here, which were very significant because on the following day that market sold off, and it sold off hard again. It then formed a base again, but this time at the 38% level in terms of Fibonacci retracement. And again, the market meandered through here until we got this point in which it sold off very, very hard, and then moved towards this last series of activity in which it closed close to, but not at, our 50% retracement, and that's right in here. When we took a look at the market, and this is last Friday, those of you who have been with me for a while know that I always look at the dojis as something that's extremely significant. We pointed out the fact that we had this doji right in here, but we had the doji form where there was technically some very, very interesting history. In terms of the history, I looked at one, the play or the fact that it was very, very close to this Fibonacci retracement level. The second thing that we looked at that we thought was very, very interesting is if we look at the bottom of this wave right in here, this is that corrective wave 4 during the impulse phase, and we carry that through. Let me do that for us. We noticed that that was the point really in which the market broke out and broke above this channel line. When we consider the fact that we actually saw a 3-river morning star, and that was this 3-day pattern, 1, 2, and 3 right in here, we issued a buy signal on the confirming candle, which was this candle here. And as you can see, the market, at least tentatively at this point, has in fact begun to form a base above this retracement area of 38%. So that as long as it can effectively trade above here, the market itself is actually finding support at around the 1180 area. Now, we are looking at this as a shorter term play because my belief is that, traders, this is going to simply be a smaller move within a larger market cycle, meaning what I'm looking at is, and again, this is just a rough idea, but we have our A wave here. Our B wave is going to be our impulse wave, and as I said, I'm not looking for that much of a move up. I would look at the possibility of a top right at around 1212. It might not make it that high, but again, in terms of standard and classic Elliott wave theory, what we are looking for is for this B wave to be approximately 50% that of the A wave to up to 75%, and of course 75% would put us right in this area. The other thing that I do want to mention is that something that we talked about yesterday, and that is what is called subwaves or the minor waves within a Elliott wave itself, a long wave itself. We talked about this a little bit yesterday, that typically on a corrective wave, and this of course is a corrective wave, our B wave is a corrective wave within our corrective phase because it's going against the basic direction of the correction itself. It's not typically going to go straight up like this. Rather, you get typically, and I say typically because again, this is just ascertaining pure theory, you typically get what's called a 3 count. And on a 3 count, what that might look like is the market will move up a little bit here, and then that's your 1 count. It will come down a little bit. That's your 2 count, and then it will move back up. So you get a count of 3 sub waves within this one B wave. In the same way that on a classic, what we call an impulse wave or a wave moving in the direction of the phase, you typically get a 5 count. So that a 5 count within a standard wave, and when I say standard wave, I'm talking about a wave moving in the direction of the phase. So this being our corrective wave A, in other words, this is moving in the direction of that correction. As you can see, this would be something along the lines of what you would look for a standard 5 count. 1, 2, 3, 4, and 5. So that if you actually look at it, each wave and then its following corrective wave actually is that 1, 2, 3, 4, 5 A, B, C. It would look something like this. 1, 2, 3, 4, 5 A, B, C. And so one thing that you see really is the beauty of Elliott wave in that when you look at it, because it is mimicking a cycle in nature, it can be broken down and have kind of the same format or the same design on a micro level as well as a macro level. So traders, my recommendations are as follows. Obviously, maintain our long position. In terms of our stop, we are sitting with the stop currently at 1155. I'm very, very cautious about trailing it back up. The only place it really makes sense to trail it back up is going to be to place it below, of course, this Fibonacci retracement number at 38%, 1180. And I'm almost not comfortable doing anything except below this one doji right in here. So my recommendation is traders who wish to protect some of their equity can go ahead and trail their stops up to 1175. 1175 on a protective stop. Of course, we're in at 1179, so virtually we've locked in any kind of a or negated any kind of a big loss in the market. This has been Gary Wagner with WFGForex.com. As always, wishing you good trading. We'll talk to you tomorrow. Bye-bye.
When I look out my window